Hello, I'm Richard Hunter and welcome to our look ahead to the week commencing the 17th of February. Much of the themes have pretty much remained the same over the last week or so. The US markets continue to go ahead strongly as the earnings season, which is now largely wound down, has been a pretty good one. In particular, of course, as we've been mentioning more recently, the US technology stocks have really been turbocharging the markets. The likes of Microsoft, Apple, Amazon and indeed Alphabet, the parent of Google, have contributed to what has been a very strong start to the year. By contrast, of course, the FTSE 100 has been under some considerable pressure, quite apart from the basic resources sectors where China, of course, is a major source of demand, so that the oils and mining stocks have been weak. We've also seen the airline stocks and indeed tourism stocks, something of a red flag being waved by Burberry recently on what the potential outbreak of coronavirus could have in terms of earnings. And of course, it's that considerable worry which has hit the FTSE 100, not just the containment of the virus itself, but it's clearly already had an economic impact as the country has been on something of a shutdown. The net result of all of that is that the FTSE 100 is down 1.3% in the year to date, and that, as I say, is in stark contrast to what's happening in the States. The Dow Jones Industrial Average up 3.1% in the year to date, the S&P 500 4.4%, and the technology heavy Nasdaq index continues its real race ahead, up 8.2% in the year to date. Looking ahead to next week, as I say, the US market reporting season starting to wind down. We've got updates from the likes of Kraft Heinz and indeed Walmart, but not too much more. In the UK, we've got the continuation of the UK banks reporting season. We've had a fairly mixed start so far with updates from Barclays and RBS. Next week, it will be the turn of HSBC and Lloyds. Certainly in terms of HSBC, we can expect some comments on the Chinese economy there, of course, whereas Lloyds may well have continued its streamlining of its business. It's got the sector-beating cost-income ratio. Sticking with the China situation, we've also got an update full year results from Intercontinental Hotels Group, so we should start to get more of a feel for what sort of impact the Chinese situation is having. Thank you for watching. Have a great week.